Welcome to ForexTV.com. It's Friday, March 14th. I'm Remy Hookey for New York Forex Market Buzz. In today's session, Euro-dollar has hit another record high, with dollar Swiss hitting parity and dollar-yen falling below the 100-yen level again. In afternoon trade as of 1:35 p.m. Eastern Time, Euro-dollar is at 1.5637. Sterling dollar is trading at 2.0243, while dollar-yen is at 99.84. U.S. equities are also taking a tumble today as Bear Stearns announced that the New York Fed Reserve as well as JPY will be providing emergency financing. The fifth largest investment bank's bailout follows deterioration in liquidity for the bank, adding to already shaky investor confidence. This afternoon, I'm joined by Jamie Coleman, managing editor of Thomson Financial's FX Hub. Good afternoon, Jamie.
Hi, Remy. Good to be with you.
Thank you for joining us at the end of a very tumultuous week. Well, given the tumble in the U.S. dollar on fears in the broader market, there are expectations of a coordinated intervention by global central banks. But help us make sense of the emergency funding plan for Bear Stearns today, especially ahead of next week's Fed rate announcement.
Yeah, I mean, this was an extraordinary action by the Fed, something they haven't done in nearly 40 years, as far as I can recall. Essentially, they have given Bear Stearns a lifeline, probably to find an acquirer in the next couple days or weeks. And the market is trying to decide whether that is whether this is the tip of the iceberg or whether this is the beginning of the end. Some would hope that we've cleared the air and the worst of the credit crunch is behind us. Others feel that there are other shoes to drop out there. There were rumors in the market this morning. One of the big European banks having funding difficulties along the same lines of Bear Stearns, a bank that's very exposed to the U.S. mortgage debacle. So there are fears that this could be there could be more of this, and the Fed or other central banks will have to again become the lender of last resort. The interesting thing is in the Eurozone, the ECB does not play that role as lender of last resort, nor does the Bank of England. And we saw the results of that in the Northern Rock situation a couple months back, when it was really kind of where the British government had to really come up with a plan on the fly to save Northern Rock. There was no provision in their legislation to provide for those sorts of circumstances. So we're in really uncharted territory in modern times, and what's going on with the financial sector at the moment.
Okay, Jamie, so while we keep our eyes on what's unfolding in the financial sector as well as the broader market, the theme in FX this week has been the continued decline of the U.S. dollar, with key levels continually being breached. So with that in mind, which pairs and crosses would you say are ideal trades right now?
Well, it certainly seems as though the euro is the prime focus for most of the markets. European growth is holding up better than U.S. growth, certainly at the moment. There seems to be less exposure from the Eurozone than, say, from the UK to the U.S. subprime crisis and the fallout from that. So the euro seems to hold up better than most of the other European currencies at the moment. Heading into next week, obviously the FOMC is going to be a prime focus. At this point, the market has a minimum of 75 basis points of ease priced in. At this point, it's sort of 50-50 whether they go for 100. My guess is after the Bear Stearns debacle, it probably makes sense to go ahead and go for 100. I mean, clearly the Fed has voted on the notion that economic weakness is by far its greatest concern at this point over inflation. They suspect that with asset deflation taking place certainly in the stock markets and in the credit markets, and in the real estate market, that's only a matter of time before at least a slowdown in inflation happens in the goods and services sectors. So they are looking past this period of inflation that we have right now, and are focused on really trying to bail out the financial sector so that ripple effects don't permeate the broader economy and lead to greater job losses than we've already seen.
Okay, Jamie, well, it is a hard time to call top for euro dollar given the repeated highs for the euro against the greenback. But at this point in time, if you could briefly give us your levels for euro dollar.
Yeah, I think most people in the market, are looking for a top somewhere. We've almost reached levels that were projected on the break of 150. I think most people thought that we would get somewhere in the vicinity 156.5, 157. Well, we did that today. Others now looking for sort of 159 to be the top. I mean, it's extraordinary to get a move of this magnitude with virtually no pullback. So, even though the backdrop in the U.S. might not change for the better anytime soon, we may see a little backing and filling just because we've gone so far without any substantial corrections. At some point, dealers become sort of fear of height sets in. It's hard to buy, when you're looking at levels that you've never seen before. So I would suspect that, if you're long, you're probably happy to at least take partial profits, somewhere between, say, 157 and 159, and perhaps start to look scaling back into positions towards the 155 area that provided a cap for a short time earlier this week, and then, maybe back towards the 153 level as the week progresses. But I think we're going to see quite risk-averse markets next week. I don't think that this Bear Stearns situation is a one-day event. I think you're going to see risk managers talking to their traders and really keeping positions rather tame in the next week or two, until we see if there are greater ripple effects to come from the Bear Stearns situation.
Okay, last but not least, Jamie, before we wrap it up for today's interview, since you did mention risk aversion, I'd like to get your take on the low yielders, especially the Japanese yen. After the pair, your dollar yen broke past the 100 level earlier this week, in today's session, the pair fell to a 12.5-year low. So what is your fundamental as well as technical forecast for dollar yen?
Yeah, fundamentally, I think the Bank of Japan, does become concerned around this 100 level. It would be difficult for them to intervene alone in this environment. It would sort of be providing liquidity that no one else is willing to provide. I'm not sure it would have much good in the long run. It might provide a bit of a trading bounce, but I don't think it would be sustainable. I think what really needs to happen is that for any sort of intervention to work, it would have to be coordinated. It would have to be quite aggressive. I've been a proponent in the last week or so of intervention for really two reasons. One, to slow the dollar's fall, and two, I think it would have a dramatic impact on the commodities market. The dollar and gold and oil have become, sort of intertwined in a spiral here, each feeding off one another. I think a well-timed intervention could prick the commodities bubble and really give the dollar a boost as well. It does not seem as though that's ready to happen just at this point. I think if it would have, if central bank or if policymakers were prepared to do it, they would have done it already this week. The conditions were ripe to do it, and they didn't. So my guess is that they will hold off for now. In terms of levels in dollar yen, I think there's very significant support in the 99.30 to 50 area. We almost touched that level early in the day, right on the back of the Bear Stearns news. If we can get through there, we are looking back towards kind of 97.30, 97.50 in there, and then it's a long way down. We're back towards we're on an 80 handle before you get to the next really significant levels in dollar yen, dollar Swiss. I think you're looking somewhere in the neighborhood on the downside, a limit on the downside of say 97.50, 98, something like that, just based off what I consider to be kind of toppish levels in euro dollar.
Okay, Jamie, thank you very much for insight and analysis, and have a great weekend.
You too.
This has been your Forex Market Buzz with Jamie Coleman, Managing Editor of Thomson Financial's FX Hub. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.